The top of this bull market will likely be much lower than the majority expect, just as the bottom of the prior bear market was much higher. In today's video, we are not only taking a look at the short-term charts, but also discussing why the top is likely not in yet. We'll also be taking a look at why we could see an earlier top in comparison to what the 4-year cycle suggests. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel, guys. Thank you so much for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the macro and short-term charts in explicit detail, going over why we believe, number one, the top is not in yet, and number two, why the top will be likely much lower than the majority expect. We'll also be taking a look at why the top will likely be earlier than what the 4-year cycle suggests, and of course, jumping in to the rest of the analysis. Now, before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, you can join us over on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education chat, our news, our daily video, our help, and of course our educational chat. If you're interested in joining all of that, go ahead and contact us in the pinned comment of the free channel. For more information, you can click those links as well. Let's go ahead and dive on in. So like we've said at the start of the video, we made a pretty bold claim, and that is the top of this cycle will be much lower than the majority are expecting. We'll dive into that further in today's video, explaining why that may be the case and why we could see an earlier top in comparison to what the 4-year cycle is suggesting. Again, we'll also be going over the short-term price action in a lot of detail, discussing exactly what is happening and exactly what you should be watching out for. So before we get into any of that, let's go ahead and start on the market data. Taking a look at the 24-hour volume, we can see volume is up 3% for the last 24 hours, so pretty negligible change over there. We're sitting at around 213 billion there for 24-hour volume. As for 24-hour liquidations, we're sitting at 273 million, down 0.41% in the last 24 hours. Looking at the 24-hour liquidations, we're sitting at that 273 million, with 197 million coming from long positions and 75 million coming from short positions. If we do take a look at the last 24 hours, we can see we did see another rejection, creating another lower high at that 69k resistance. Again, the 69k resistance level, if we zoom out to the higher time frame chart, we can see it is going to be that prior 2021 all-time high level at 69k. So a pretty nasty rejection on the short term. A very key level we do need to break above to continue higher, and we'll be discussing exactly why in just a moment. Moving back over to the data, guys, we can take a look at the DXY. The DXY is coming up to challenge. Let's go ahead and take a look at this. It's challenging that downtrending diagonal resistance. We can see that downtrending diagonal resistance. We have been in a downtrend for about 5 to 6 weeks now, since the 15th of Feb. Of course, this downtrending diagonal resistance is a key level for the DXY to break above. If we see a breakout of this level, this could send the DXY upwards. And again, if the DXY goes up, this is increasing the strength of the US dollar, okay, relative to other currencies, which generally provides some downward movement for the broader markets. This is generally a bearish sign. Of course, we have not broken through that level yet. We are challenging it. We could still see a correction from that level back down to our prior lows. Again, the directional continuation of which we do see develop from this level is going to be heavily tied to the upcoming FOMC meeting in just under 48 hours. We discussed this in pretty broad detail in yesterday's video. We'll go over it very, very briefly nearing the end of today's video as well, because it is relevant in regards to why the top and why the top of the cycle is likely not in yet. Moving over to the broader markets, we can take a look at the S&P 500. It is continuing upwards, nice and green on the weekly candle with 3 days and 22 hours remaining. Again, provided we hold above that $5,000 level of support, we are likely continuing upwards to around 5,500 on the higher time frame. Provided we remain above 5,100, this is going to be our short-term area of support. We're again going to be continuing upwards. If we do lose these two levels, we could see a correction back to the prior all-time high. Currently, no indication of that, looking strong. Moving over to the Dow Jones, exactly the same thing over here, holding above that $39,000 trigger level. This black trend line you can see, which is arrows pointing towards. If we remain above this level, we are still expecting a move to 40,000. If we break below this level, we could see a retracement back to 38K. And if we lose 38K, well, it's going to be a retracement back to the prior all-time high. Again, while we remain above 38K at a minimum, we are expecting a continuation to that 40K level. So all in all, looking very strong. Without further ado, we'll go ahead and jump over to our advertiser for Bitget and BingX, and then we'll jump into the price action analysis. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and dive right into it. So again, we have a lot to talk about today. We're going to be talking about the shorter time frame charts in explicit detail, giving you guys a couple plans for basically every scenario. We're going to then go ahead and take a look at the weekly candle for the broader chart, which is going to be our weekly and our 3-day chart over here. And then we're finishing up on the macro, discussing number one, why the top is likely not in yet, what we need to see for a bear market to develop, when the 4-year cycle suggests the top of the bull market will be, and why we believe the top of a bull market will be sooner than that. And then we'll also discuss why we believe the top of the bull market will be much lower in terms of price than the majority will expect. So let's go ahead and dive on into it. Starting on the short-term price action, we can see the short-term chart over here is quite cluttered. I have added a lot of annotations on the chart to help you guys out. We do have our major support first and foremost all the way down here at $60,000. We have our key level of support at $66,000, which we are currently in the relative range of, and our key level of resistance at $69,000. The distance between $66,000 to $69,000 is a very key level. This is in fact a sideways chop zone. The reason this is a key level is if we zoom out on the higher time frame, we can see the distance between 66 and 69 is in fact the weekly closing price of the 2021 top. Okay, and the highest price ever reached in 2021. So it is going to be that range between the high, the all-time high of 2021, and the weekly closing price of that exact candle that went to the prior all-time high. So we're in this higher time frame area of confluence, where you call it a resistance, a chop zone, whatever you want to call it. This is a very critical level that Bitcoin is sitting within. So with that, we have a very significant support level and a very significant resistance level, as the directional break from either of these levels will not only determine the short-term move, but the likely extended directional move over the coming weeks, maybe even the next month. So very important range we are sitting in. And then we have our upper level of resistance, which is again defined as a $73,000 to $74,000 resistance. The prior all-time high we created a few weeks ago. This is the brand new all-time high for Bitcoin at around 73.9K. So breaking that down even further, if we take a look at the expectation conditions when these levels break, we have to take a look at these annotations. So, from the downside up, a break below our major area of support, again, we can see a liquidity crash down to around 58 to 52,000. We also did tell you guys, watch for liquidity grabs and reversals to develop within this range between, again, our sell side liquidity, this is our sell side liquidity, and the 60k area of support. We could definitely see liquidity grabs below this level to tap that sell side liquidity before reversing on the higher time frame, or if this area of support shows weakness, significant weakness, and we do not see those liquidity grabs, we could see an extended correction back down to retest again 58, 57, and fill that VIPV gap we've developed on the way upwards. Okay, that is a real scenario. But again, we do not expect this to occur as we have not retested this level yet. That is only a possibility when we approach that level, and for us to approach that level, we would need to break below 66k. So looking at the next one over here, we have got the bearish continuation on the short term, breaking below 66k, would result in a correction down to the area of support. So if we do see a breakdown of that 66k level, we could see a bearish continuation down to our prior area of major support, which we just discussed. We'll come back and discuss this in a little bit more in a second. Moving upwards, we have our major bullish trigger point. Our major bullish trigger point is going to be corresponding with the $69,000 resistance. You can see a break of that $69,000 resistance will likely send Bitcoin into that 72 to 73k region, filling that gap in the VIPV and potentially pushing us up to retest that prior all-time high resistance. And finally, guys, a break over this local resistance will result in a continuation on the higher time frame, 75,000, 80,000. So let's now talk about the developing trend, the strength, and why we are looking for these specific things. If we look at the current trend, we have got this parabolic curve happening inversely on the price action chart. We've got a very, very clear downtrend with lower highs printing as the price action is moving in a downtrend. We can see the gradient between these lower highs are starting to plateau. They're starting to flatten out. This is significant as it does indicate that the downtrend we are in is potentially beginning to exhaust, if not, again, enter this period of indecision, enter this period of equal selling and buying pressure, which could again result in new structures developing or reversals developing as a whole. If we look on the downside, again, we're seeing the same thing. We're seeing lows, we're seeing lower lows, and we're seeing lower lows develop. So we're very much in this overall downtrend. So as we said already, for a continuation upwards, we do need to break above that $69,000 level. More importantly, a break of that $69,000 level will result in a continuation upwards and break out of the downtrend, as we will be breaking over this lower high. So the moment we break above that lower high, that is going to be significant as we're breaking above the structural downtrend we have been developing since the 14th of November. So like we said already, it's not just because we're breaking over 69,000 that we're going to see a continuation. The result of breaking over 69,000 puts us in a position on the chart that is going to signify strength, which will increase the likelihood of a continuation higher. For the alternative and the downside, we have got our lower low level. I've gone ahead and marked this out by a horizontal line. A breakdown and loss of this level will result and confirm a correction lower. But that is contradictory to what I said before. I said 66,000 is the support level we need to break down. And that is true. But we do have to recognize there is a zone of where we would have potential liquidity grabs developing from, and this is going to be this zone right over here. So I'll go ahead and mark it out. Oh, looks like I got the wrong thing. What I'll just go ahead and do, I'll just draw it in. This area right over here between the 66k support and this semicircle area where we have these prior liquidity grabs is going to be our liquidity grab zone. If we see large wicks in this area, it is very likely we're going to bounce back above the 66k support and find support. If we break below this lower low, that is when we are expecting that continuation toward the downside. So I hope that explains everything on the short term, guys. While we are in this phase over here, this consolidation, we are in a chop zone. It is very likely we're going to bounce between these levels many times. It is only when we break above, again, our respective lower lows, okay, or our lower highs, that will have these significant shifts in the direction on the short term, which could result in continuations on the price action chart again, which will then result in a breakout of these weekly levels of resistance. So let's take a look at this again. If we break above that 69k level, we are clearing that weekly resistance. It is looking very bullish for a continuation. If we break below that 66k level, we are clearing that major level of support. This area becomes deviation from the prior high, and we could see a correction back down to that 60k area of support, which we discussed on the short term. So a lot is going on, and again, the short term is of absolute significance in determining where Bitcoin is going. Remember, what develops on a short term over and over expands, and then it shows up on a macro and high time frame chart. So if you want to determine where the price action is likely to go next, you have to be using contextual analysis on the higher time frame, and then look at what the short time frame is doing, and then cross analyzing the two. So let's go ahead now and discuss the macro. And we said at the start of the video that the top of this cycle will not only be lower than most expect, but will likely see an early top in comparison to what we have seen in prior bull markets. So let's take a look at that statement. In prior bull markets, we have seen a very, very clear pattern play out. This is going to be our days between tops and bottom pattern. We also have another pattern that plays out, which is actually our days between our lows, okay? Our cyclical pattern, our days between our lows. So let's take a look at the first one, first and foremost. If we take the distance, okay, and there's a lot going on, if we take the distance between, okay, our low points of the cycles to our high points of the cycles in both of our prior cycles, our first bull run and our second bull run, we have seen an equal amount of days, which corresponded to a total day count of 1,064 days, meaning from the low to the top. In the first cycle, we saw 1,064 days. From the low to the top in the second cycle, we saw 1,064 days. So according to our cyclical patterns over here, the 4-year cycle would suggest if we saw that same thing play out from the low to the top, we would see 1,064 days, which would take us to a date of October 6th, 2025. However, there are a few things that we would contest against this theory, which we've been talking about for months on the channel. We were talking about this many, many months ago. If we take a look, guys, at our breakout on this chart, we can see that the moment we break above the dotted trend line, this is kind of when we entered the bull market. We know we entered the bull market upon the breakout of the dotted trend line as the trend angle, okay, the angle of the trend significantly steepens the moment we break that dotted trend line. From the breakout point to the all-time high, okay, and from the low to the breakout point, we see the trend angle steepen massively from 30-ish% to 55 to 65%. A steeper trend signifies we have more demand, more strength, more volume. Overall, it is representative of a stronger market. And if we see that play out over many, many months, which we have seen before when these trend lines break, we see and what we would call a traditional bull run. So we have broken above that dotted trend line. So if we take a date measurement from the point of which we break that dotted trend line to the point of which we create an all-time high, that gives us 14 to 13 months. So applying the date range from that breakout forward, that would bring us to a possible top point for Bitcoin between March and April 2025. If we move back to this chart over here, we can break down our accumulation and bull run phase into a few segments. We of course have got that 1,064 days from our low to our expected top. If we break that in half, we have got accumulation, okay, and we have got bull run phase. We've got, 532 days on each side, 532 days on each side, and then we have got, again, our next breakdown. We have got our first segment of that and our second segment of that. This is what we will call our left translated and right translated cycle. A lot of people are saying we're going to see a left translated cycle, which would indicate an earlier top. If we were to see that, guess where that puts the top? It puts the top in March to April to May. That is when the expected top would occur. Now, if we go back to this chart is expecting exactly the same thing. So there is confluence between those 2 points. Now, if we go one step further and we take the date range breakout from the prior all-time on the monthly to, okay, the date range trend breakout from the prior all-time on the monthly to the tops, we can see that gives us between 8 to 12 bars. So applying a shortest distance, provided we break out on the monthly this month, we might not, but provided we do, that would take us to an early date of November 2024. So the date range we would expect the top to be in for Bitcoin would be between November 2024, okay, at the earliest, and March, April 2025 at the latest. So moving back to this chart, if we take a look at the days between lows to lows, okay, days between lows to lows, we can see these bottom trends over here. If we look at our first cycle low, 12-second cycle low, we have 1,428 days. With second cycle low to third cycle low, we have 1,428 days. Therefore, we would assume our third cycle low to fourth cycle low would have 1,428 days. That would take us to a date of October 5th, 2026. So if we were to see a left translated cycle top in November earliest, March, April latest 2025, we would see a bear market larger and longer than we have seen in the past. So do we expect an earlier top? Yes, according to the 4-year cycle, October 2025, according to the data we have, we would expect a much earlier top than October 2025. According to the 4-year cycle, according to the date range trends and the cyclical patterns, if we were to see an earlier top, we would expect an equal low, which means we would get an earlier bear market and a longer bear market. So, do I believe the top is in? No, this is the next statement. I do not believe the top is in. And why don't I believe the top is in? If we look at macro patterns, if we look at the price action on the higher time frame, we have to understand price action on the macro scale is not just driven because people want to buy, okay? That is the essence of it. But what actually drives people to want to buy? What drives people to push the market up over a period of time? The drivers behind macro price action can come back to, again, things like economic policy, monetary policy, taxation policy, societal perspective, and most importantly, perceived systematic risk. So, when we're looking at macro trends and the direction of macro price action, we have to analyze why people are driven to buy. And what are those drivers that are pushing people to buy? And thus, if these drivers are remaining intact and do not change, it is unwise to assume the market is going to move against it as it hasn't done so in the past. So when we're looking at price action for Bitcoin, what were the main drivers of the price action moving up? Number one, well, we have societal influence. We have the ETFs. The ETFs are a big one. Everyone's got into ETFs, it's bullish, everyone's heard about it, it's brought positive attention to Bitcoin, it's established Bitcoin as a institutional asset, a legitimized asset. This is very, very good societally as people become more aware to Bitcoin and more open to investing in cryptocurrency as a whole. Then we have the most important, and this is going to be economic policies regards to interest rates. We have seen many months now, okay, of interest rates plateauing, pausing. If we look at the narrative that has been developing since early 2023, we told you guys at the bottom, we bought Bitcoin, we told you guys, the narrative was shifting from bearish to bullish as it was starting to talk about the potential for future interest rate cuts. If there is a potential for future interest rates cuts and people start talking about it, particularly the Federal Reserve, start mentioning it as likely, what happens is the perceived systematic risk in the market significantly drops, and with perceived systematic risk dropping, people start to front run that. They start to get into the market before we see those interest rates drop, okay? And that is one of the main drivers as the price action moves upwards. So provided the narrative remains intact, which is we do still expect interest rates to drop in 2024 and moving forward, it is very unlikely risk asset markets are going to move toward the downside on the macro. Yes, we could see short-term pullbacks. Yes, we could see weekly pullbacks. Yes, we could even see a pullback down to 52,000, worst case scenario. But provided these narratives remain intact, these narratives that have been driving the price action up remain intact, it is very likely that the overall macro trajectory is going to continue in that direction. And betting against that, while the data does not express that we are going to see those narratives change is betting against a likely scenario. So if you're expecting a bear market to happen today, which is going to take us to brand new lows, you are betting against literally, okay, all of the economic data we have, all of the market data we have that is suggestive of the other scenario, which is we go upwards. So guys, remember, when you're looking at macro patterns, the price action on the intraday or intra-week is very, very irrelevant. You have to understand what is actually driving the price action upwards, what is causing buyers to enter the market, and provided those narratives remain intact, those bullish narratives remain intact, it is likely the macro trajectory will continue in that direction, okay? Now, moving on from there, guys, and we've talked about this so much. If you want more information, go ahead and check it out. There is so much more to talk about. Moving on to our last point, why we believe the top of the bull market will be much, much lower than the majority expect. Obviously, guys, we enter the euphoric phase of the bull market at some point. We're going to see prices rise. We're going to see everything explode. And just as always, people get overly emotional. Over emotion becomes illogical. Illogical becomes irrational. Irrational becomes basically delusional at some point, okay? The prices will not go to 400,000. The prices will not go to 600,000. It's very likely we won't even see $200,000 for Bitcoin, okay? All I'm going to say is when you're looking at selling Bitcoin, when you're looking at the cycles, do not base your decisions on price. Base your decisions to sell based on developing narratives, which could actually drive the price action on the macro. So as soon as you start seeing narratives develop which are bearish and have potential influence on perceived systematic risk that could bring that down, that is when you start considering to rebalance your portfolio. When you start to see the strength on the macro chart diminish based on what we've seen historically with momentum, that is when you start to rebalance your portfolio. If you're sitting there waiting for a specific number, you're an absolute chump. Let's just go back to one more chart and we're going to finish it off, okay? I'm not going to explain it. I'm just going to show you these charts really, really quickly. Again, we've explained this many, many times. We have to look at, when we're looking at macro price action, macro drivers of price. Price doesn't just randomly move, guys. There are reasons why markets move upwards for extended periods of time, and there are reasons why markets move downwards for an extended period of time. It's not just random. It is very, very structural. You have to understand the relationship, okay, between inflation, okay, between interest rates, the cost of debt, and spending, and how this influences the market, and more specifically, how this influences individuals and companies that acquire assets on debt or just acquire assets based on inflow and debt expenses, okay? Then we're looking at stuff like this, interest rates, okay, and inflation curves. We're taking a look at this as this is an indication of future perceived systematic risk, which is a main driver, okay, of price action and risk in the market. All of these things are connected. You have to understand the macroeconomics when you're looking at macro price action. Too many people are drawing lines on the chart. Too many people are using Elliott wave to predict 500,000, whatever the hell it's going to be. None of this stuff matters. What matters is the narratives behind what is driving the price action remain intact. If we start to see perceived systematic risk increase again, people are going to start to naturally rebalance their portfolios. If that develops over a higher period of time, we start to see sell-offs in the market. It is simple as that. Thank you for watching. I hope you have a fantastic day. Let me know what you think down below, and I'll catch you guys in the next one on Thursday. See you then. Peace.